Welcome to today's explainer. Look, if you're a novice trader staring at price charts and feeling like you're trying to read a completely foreign language, or honestly the Matrix, you are in exactly the right spot. Today, we're putting together a complete, super straightforward blueprint for identifying bullish entry signals. We're going to take those chaotic green and red bars and transform them into a crystal clear roadmap that shows you exactly when buyers are taking control of the market. So let's just dive right into this and fundamentally change the way you look at trends and entries. Alright, let's kick things off by looking at the sheer power of this single statistic right here, 60%. Now, we've all heard that old trading adage, the trend is your friend, but it's not just a catchy rhyme, right? It's actually backed by hard data. Statistics show that price will continue its current trend 60% of the time. This means that right out of the gate, simply by choosing to exclusively take trend continuation trades, you're operating with a 60% win rate. You are immediately doing better than a 50-50 coin toss. Our main goal today is to give you the exact visual tools to capitalize on that 60% advantage. So, here is our game plan for this explainer. We'll start off with the trend advantage, move right into spotting single candle signals, and then check out multi-candle formations. After that, we'll run through a specific indicator setup checklist to actually automate your charts, and we'll wrap up with executing the entry. This structured approach is going to completely demystify your charts, I promise. Okay, part 1, the trend advantage. Let's talk about why we follow the market's momentum. Before we even start looking at specific candle shapes, we really need to understand what we're actually looking for on the chart. If you're familiar with Williams fractals, you already know that every single time price makes a higher high or a higher low, it creates what's called a pivot point. Imagine this literally like a giant neon arrow on your chart, pointing directly to a shift in momentum. Bullish candlestick formations, well, they're simply visual clues. They show you exactly where these highly profitable pivot points are most likely going to happen within an uptrend. So the absolute crucial takeaway here is that we aren't just looking for patterns blindly, we're looking for patterns that specifically confirm a pivot in the direction of the overall trend. Moving on to section 2, single candle signals. Time to dive into the hammers and the dojis. Let's grab our first set of visual tools and see how this actually builds your understanding. Over on the left, we've got the classic hammer candle. You'll notice it has a really long wick pointing down, but the body itself closes bullishly, meaning, it closes higher than it opened. This single candle is incredibly powerful because it tells a story. It tells us the price was pushed aggressively down by sellers, but then the buyers violently rejected that drop, pushing the price all the way back up to close green. Now, look over on the right. That's the inverted hammer, which has a long wick on top. This one is generally a lot less favorable for a bullish entry because that top wick shows sellers pushing back down. When you're trading these, think of the hammer itself, and then look for the arm that swings it, meaning you always want to watch the very next candle because that usually confirms the direction the hammer is actually going to swing the price. Next up in our single candle arsenal, we have the Dragonfly Doji, and this one is honestly fascinating. It opens and closes at the exact same price, which creates that totally flat horizontal line at the top, but it has a massive wick on the bottom. Just like the standard hammer, this reveals a dramatic move downward that was met with an absolutely fierce rejection, pushing the price right back up to exactly where it started. When you spot this at the bottom of a pullback during an uptrend, it's a prime visual indicator that the downward momentum has officially died out and buyers are stepping in heavily. All right, section 3, multi-candle formations. We're talking engulfing patterns and stars. As we get into formations involving more than one candle, I really want you to keep this brilliant quote from the source material in mind. Price moves in accordance with who has the most strength. It's a fist fight every day. And I love that because it brilliantly illustrates the reality of the market. Every single candle is a literal physical battle between buyers and sellers. So when we look at multi-candle formations, we are specifically hunting for undeniable evidence that the buyers have just delivered a knockout punch to the sellers. Here are the heavy hitters, the multi-candle formations that signal massive shifts in momentum. The absolute favorite of our sources is the bullish engulfing candle. Ideally, you want to see a few bearish candles pushing down, followed immediately by one massive bullish candle that completely engulfs or covers the entire body of the previous red candle. It's a total reversal of strength. Then we have the morning star and the morning doji star. Both of these feature a very small star candle at the bottom of a downward move, which shows indecision, and that's then followed by a huge bullish candle that just rockets upward. Finally, the 3 white soldiers. After price comes to a halt on a downward move, you see 3 consecutive solid bullish candles. All of these clearly demonstrate that the buyers have overwhelmingly won the daily fistfight. I also want to just briefly mention the piercing line pattern. This happens when price gaps lower to begin a new session, but then surges up to close above the midpoint of the previous bearish candle. It's a really great sign that buyers have overwhelmed sellers. But hey, there's a vital caveat here. This source strictly advises against trading this pattern on short intraday timeframes. Because it relies heavily on market gaps, the piercing line is much better suited for higher timeframes, specifically the daily chart. So make sure to treat this as a tool primarily for swing traders rather than day traders. Okay, let's get practical. Section 4, Indicator Setup Checklist. Time to automate your chart signals. Now, how do you actually implement all this without giving yourself a major headache trying to memorize every single little shape? Simple, you automate it. If you're using a standard charting platform, here is your exact step-by-step cheat code. First, open your Indicators tab and search for the built-in technical called All Candlestick Patterns and add it to your chart. Once it's there, pop into its settings. Change Detect Trend to No Detection. Change the pattern types to bullish, because remember, we only want to buy the dip in an uptrend. Finally, only tick the boxes for the specific patterns we just discussed. The Dragonfly Doji, Engulfing, Hammer, Morningstar, Doji Morningstar, Piercing, and 3 white soldiers. Don't tick anything else. Now your chart is going to automatically print a label right on your screen whenever one of these highly profitable formations appears. Which brings us to the main event. Section 5, Executing the Entry. Let's put this blueprint into action. This right here is where we pull the whole thing together into a simple checklist. Step 1, analyze the market structure for those higher highs and higher lows so we know the trend is up. Step 2, wait patiently for your automated indicator to print a bullish pattern label. Step 3, once that's confirmed, enter your long position. Step 4, and this is absolutely crucial, protect your capital. Always place your stop loss just below the lowest wick of your entry candle so you're protected if the trend fails. Step 5, target exactly 10 pips of profit. By tightly coupling these visual entry signals with strict stop loss rules, you naturally filter out bad trades and easily snag those wins. So there you have it. We've covered the psychology of the trend, the precise anatomy of bullish rejections, and exactly how to automate your charts to spot these entries for you. The blueprint is in your hands, completely demystified. So the only thing left to do is ask yourself, are you ready to open your charts, put this systematic checklist into action, and finally let the trend be your friend? Thanks so much for joining me on this explainer, and happy trading.